The S&P 500 and the Nasdaq 100, we jump into the market, and out of the gate, you can see it was a pretty fantastic day overall. We get a bulk of that move right there in the pre-market with CPI really pushing us into overall resistance and then kind of coming down. Now, I'm going to highlight where these zones really come from, why we're marking them out, and how you can be addressing these for your trading into tomorrow, and then ultimately where we're going. But right now, you can see if you go to like the 2 hour, 1 hour, this is your 50 daily moving average on the Nasdaq you're coming right into, rejecting off of, and kind of getting a little bit of a pullback. Your other level you're watching right here is 21.32, which is kind of where you chopped around this morning, but ultimately holding on for the most of the day, staying above VWAP as well. And we go into the CPI numbers. I post these on Twitter. The Twitter link is down below. I recommend you follow on Twitter so you can get these updates, and if you follow me, then it'll just help you out. So CPI, let's go over both of them. Number one, number two. So you had core CPI year over year, 3.2 with estimated 3.3. Then you also had your core CPI month over month, 0.2 versus 0.3. Core, in my opinion, is the most important. Headline is kind of secondary, personal opinion here, and also what the Fed has said as well. Something that I did mention to you guys last night too, if you follow on Twitter, I do post some short content on there as well. I did post here around expectations of CPI based on previous PPI reports. And I mentioned in yesterday's video, I was kind of skeptical, but again, this has been like 100%. So going into this, you had to expect CPI to come out pretty decent, and it did. We also mentioned if CPI came out good, you had to anticipate we start pushing back into these next levels. Now, this is where things get more interesting. So we had a good PPI, good CPI. Jobless reports, I think we get some more tomorrow as well. And then Trump inauguration on Monday. I anticipate a bullish Trump inauguration, personal opinion. But the things that we need to look at right now, specifically from just a key level point of view, going to something like the daily. Again, what I'm watching for right now is your July highs right here. 21,500 basically. 510, 500 flat, right? You get above that level on Nasdaq, and I am very, very bullish at that point. It gets really interesting. Now, the other part of this that I'll say, if you look at something like the 4 hour time frame, you are still, and yeah, I'm being unbiased, you are still making lower highs on this 4 hour trend, right? You can still clearly see lower highs, lower lows, clear as day, right? So that is the important thing to understand in the short term here, is you're still making lower highs and lower lows. So you can't jump the gun. But in my opinion, getting back above 21,500 on Nasdaq, put you back above July highs, which has been your very big line in the sand. I think bulls would set us up to make a higher high off this range and get us out of basically this just downside range that we're trading in. Now, going into tomorrow, what am I going to be looking at here? Okay. Number one, so we have two things that we need to really be watching. Your 50 DMA here, if you get above that, I think you'll easily break above 21,510, but we'll see. Okay. But going into this a little bit further, we're going to extend this out, your 21.32 range. Now, some of these levels I have to spot overnight if I'm coming into the pre-market, understanding where we're at. Number one, this was your pre-market high, and it goes back even further. And this is kind of what you're line in the sand for the remainder of the day. We also posted this in Discord so everyone was aware of what was taking place here, what we needed to break above, where we needed to hold, right? So we're talking about the rejection, things happening there, the downside back into VWAP, right? So again, I want to see us hold above this going into tomorrow, right? So I would love to see us hold above, start breaking back up, and ultimately getting back above this level here, right? That's what I would like to see, right? Right back above the 50 DMA. If we start operating below this range, okay, I'm looking for us to start pushing back down near 21.12, maybe 21.2 flat. We'll see. But so far, very illiquid move to say the least, right? This move basically from 21.12 all the way into 21.32, there was nothing. There was no liquidity. It was very quick, very easy. That means not a lot of liquidity back on the way down. So the concern there. Going into something like ES, what are we looking at here as well? Again, ES came back into our level, 59.91. I haven't had to do too much work when it comes to ES because your levels have just been so respected, right? You have your 100-day moving average, which you just broke back above as well, pushing there. If you break up and you can hold 59.91, I'm targeting the 50 DMA and then 60.50 overall. You're kind of lagging now. Like you had ES holding it better. Now NQ is moving better on the day compared to ES. Okay, so important to understand that. Dow is still the king here, in my opinion, respecting all of our levels that we've talked about, going right into our next one. So again, if you've been here for any time at all, then you know we've been talking about these ranges, these levels. You hold above 43.5. I think you're running into 43.8. Okay, I'm throwing this in the middle of the video, guys. If you're interested, I have a lot of educational content on my second YouTube channel. I post all the time on my main channel. So maybe you guys have seen or have not seen. Anyways, it's just Tyler Wilson OD. I'll probably put it down somewhere below as well. If you guys are interested, I post videos every week here. I'm trying to post more than one video a week now. Definitely step it up over there. But I've wanted to give you guys more free education. And again, I'm trying to get rid of that barrier of paying. If you want to talk to me all day, me and Jordan, what we're doing in the market, then obviously there's a paywall for that. But if you just want to learn, like, I want that all there for you as well. Also, too, I do want to highlight, the Twitter. I talk about it all the time and like what's happening here. So I encourage you guys to follow on Twitter. But we do have those discounts still for my funded futures. Let me show you what the discounts are. Yeah, so if you're a first-time user, you get 40% off when you use the code. The link is down below as well. I'm super happy with the success you guys are having over there in futures. And like, this is the point, guys. It's like to see, like, hopefully you guys taking that next step in your trading and making more money. I'll have another $5,000 withdrawal. I'll probably post on Twitter this weekend. But like, this is the point, like, guys, I'm just happy to see you guys winning and succeeding. Discord, you guys are killing it lately. Biggest story again is Jay West keeps killing it. 50 grand so far in the year. Keep it up, man. But I'm gonna tell you right now too, with Discord is not an area to where you join and you just start winning and making a lot of money. I want to say that right now. The common denominator is putting in the work, knowing what to look for, asking questions. And then we're just like another indicator. But anyways, I appreciate you. Let's get back to the video. 43.87. So Dow does look very, very strong as well. So again, top of my radar there. Really strong name there. Breaking down Qs and SPYs if that's your thing. So SPY I mentioned yesterday going into your 50 DMA here. You ran right into it. 594. Surprise, surprise. Going into Qs. You're trying to get above that 516 level now that we talked about as well. You mounted your 50 DMA at open, which is really important to understand, and set a baseline for your support for the remainder of the day. If you can get back above 516.6, I think this thing wants to run closer into 519, maybe even 520 as well there. But you can see where this level kind of stemmed from back here as well, 515 to 516. That's really what you want to see, and you're holding above those levels right now. Now, as you jump into the other part of this video, which is equities and how equities are driving the market and what's really happening there. I do want to just highlight the first part of the video is always most important when we address futures and what's happening there. Okay. But before I do that, I want to just go over something. And again, if you're watching this video, don't get mad at me. I'm not roasting you. I think this is a teaching moment, right? I try to answer questions as much as possible here. But with answering questions, sometimes you might be a teaching example. Okay, well, the guy deleted his post, but I'll basically give you the gist of it. I wanted to like cover it. I didn't want to like mistake his words. But a large portion of people right now are really getting hyped up on yields. And I understand yields are a major issue. The 10-year, the 30-year, they're major issues right now. Okay, I understand that. But you have to be able to displace your bias. And what does that mean? You can have an assumption or a feeling of how the market will react to X information. But if the market isn't doing that, then you have to be able to say, well, this is a disconnection and this is not currently happening. This is a great for instance. So giving you an example, with yields going up like this, based off what's happening with the expectation from the Fed, etc., you've seen typically the market pull back. Okay. Now there's a disconnection here. What do I mean by that? So for instance, if I bring and highlight this date, this was our previous like local high on the 10-year yield. And it's going to be the same for the 30-year yield. It's April, basically 20th. We'll say April 25th, right, of 2024 this year. The previous date before that was your local high that you had, October 2023. Now, what you're going to notice, and I just want to make a point here, and this is why I've been so adamant of the market still looking so bullish, right? If I go and just mark these days really quickly. So one, we would go to April 2024, which is the first one I mentioned. I think it was like the 20th or some shit when I mentioned it, right? So the 20th was right down here, okay? This was your dip that you had, okay? Right there. Before that, it was October 2023, right? And I'll just mark the lowest level of October, right? We'll say down here, right? Okay. This is interesting. And again, like, we have to be able to be honest. And if you are honest, you won't be able to understand what's happening in the market and why you're wrong. That's the point of journaling and understanding these things is, well, why am I wrong? So I can save money or I can make money in the long run of these things. So these are your 2 points there. Okay. Now just really quickly going back into the 10-year yield. Okay. These levels, right? We got higher than that level there. But the problem here and the disconnection here is one specific thing. It's that Nasdaq is obviously moving in an upward direction during that time, right? So yields are going back to high levels, but the market is outperforming dramatically to where it was. Now, this could be a bubble or things you want to highlight there. That's still an emotion and still a feeling of what you're saying there, because there's no rationale to say that we're in a bubble yet based on revenue and overall growth with the market as a whole, GDP, etc., right? If we look at the overall average PE ratio of the top names in the market, they're still in a very good position compared to like something like 08 or 2000, right? So those are things to think about. So when we use this as a ratio of yields are high, stocks have to tank, not necessarily, right? Because again, we've seen as we were making these peaks, the Nasdaq continues to climb. And right now you're climbing much higher, right? Very important that we're understanding that, right? Even mortgage rates aren't as high as they were at those peaks on yields either. Very important that we understand that. Now, climbing into this even further. Again, I'm probably going to block this guy off of Twitter because I don't think it's cool that, like, if I post something and I'm wrong, like, I just fess up to it. Like, it's cool, we're wrong, it is what it is, right? I might get trolled for a day. So, yeah. When you go into what's happening here on yields, right? The statement was, okay, inflation data won't affect what's happening with yields. Well, that's a stupid statement as well, because inflation data directly impacts what's happening here. So CPI tank, it's dropping relative on the day, right? We still need to see yields come much further down. But this is a step in the right direction because inflation data is surprising everyone. So my point here is don't think you know it all, even me sometimes, right? The reaction when what was happening based on yields, I was completely dumbfounded with what's been happening lately. But the one thing that I can address is that the market still looks so bullish because it's still outperforming based on previous trends, right? So again, if you don't understand something, it's typically best to just not say nothing or to say, hey, I don't know this, but this is the reaction that we're getting. So this is my assumption based off that. But it's more of an assumption. It's not a concrete fact evidence. So we need to understand that as well. So when people try to pretend like they understand what's happening with yields based off the Fed, you really don't. What's happening in the downside of the Fed, what's happening here, I've said it plenty of times, it's the fear that they don't want to cut rates. And it came out today that there's a Bank of America's pricing in the fact that we might not cut rates for all of 2025, which is bad for yields. I will say that's bad news, and yields will probably continue to rise. But the other side of that, the really bad news is the interpretation from the Fed and how they're going to react with the Trump administration, which we really don't know yet. I assume it's going to be bad, but we really don't know the answer yet. And the market's still pointing in that upward direction. Going into equities that we like, what I'm looking at right now. And I'll probably clip this part so you can like skip ahead if you don't want to watch that. So sorry if you had to watch that part. But anyways, going into equities specifically, Nvidia getting back above its level, came down to 130, holding that area. We talked about the support down here. This is something we mentioned, right? The market can look as bad as it wants, but when all these equities are coming down to major supports, it just has you have to think to yourself, look, if everything does support, is it a good time to go short? Not necessarily, probably not. Good bounce here on Nvidia. I want to see us back above 140, probably time to go long there. AVGO is the tricky one. This is the worst looking stock out there in my opinion. Some people may disagree. AVGO, it's like just sitting at 228. Really weird movement. I think AVGO should be performing better. You hold 228, I'm bullish, but this is just weird. I don't like it a lot. I'm staying far away. ARM. This is a really interesting name right now. You're kind of having this little downtrend that you can see here for a while. I think ARM is, I've said it a lot when it comes to mid caps, not extremely large caps, but mid to large caps. I think ARM is a big winner and one of the best performers that could happen in 2025. I thought AMD had maybe some upside. I was wrong. You got below the 200 SMA. I've been saying since you got below the 200 SMA, steer clear. ARM looks really good. So I still like it. Looks really good. It gets above 150. A lot of upside there. Tesla's been one of the easiest trades out there. I've mentioned it time and time again. What do you need to watch? 414.5, 415. This is your previous 2021 high. Look at the reaction to our levels. And again, this isn't a point of saying, okay, look, our levels are so good. You need to do this, this, and this. No, it's to prove the fact that it works. Okay, understand that this actually works. And that's why we talk about it so much. If you focus on what works, you take notes, you journal, typically you'll notice it in your work if it's actually performing for you, right? So Tesla looks really good. If Tesla holds 430, I was just talking about this with Jordan before I started to make this video. I think Tesla could run back into highs. It does look really, really, really good. Netflix, this was our only trade here on the day. We traded it into 850. I still think Netflix has a lot more upside. So Netflix has been trading in this like kind of downtrend here, as you can see, for the past few days, basically since Friday to now, just in this downtrend, breaking back out. I loved it, right? So in Discord, this was my only trade on the day. And I had futures trades, obviously. But yeah, so this ran really good. We started buying it on the breakout of 841. We said break retest of that level, look to go long. I think Jay mentioned something else. He liked Apple a lot, getting back above that key level, but it's for those leaps. But again, so Netflix looks really good. I think it has room into 859 and then 868. I'd be watching it still. Big fan here. I'll probably be looking to trade it once again. Meta, one of the strongest names out there as well. I was looking for the break today of 606 down to 603, but you held your low. You just held it all day, so I couldn't go short, right? So you get back up, you shoot straight up, right? And you're going back to the highs right now. Meta's another one of those big performers right now. What I'd be waiting for here, though, on Meta, super simple. Getting back above this little level here. You can see this little swing level, right? You can see right where it's at, right about there. You can see what's happening. So you're trying to mount 616, 617. Above 617, I like it a lot back to the upside. Still looks really good. I think Google is another big winner here too as well. We talked about getting below 192, but again, as it remounts 187, I'm a big fan back into highs. You've got over 187, back above 194.5. Dude, beast. It looks really, really good as well. Those are my top names right now, what I'm really watching out there in the market. I'd be patient. You look really good. I think Apple looks good too. I keep saying that one. Apple looks really good. I didn't cover it, but it looks really good. I like where we're at. I like how we're moving, and I really like how the market is reacting here so far. The biggest thing that you want to see for continuation from bulls here. This has been the problem. We've had a good movement, but we haven't had continuation. Getting back above 21.5. Above 21.5, 21.510, you look amazing. I'll have updates on Twitter, things like that. Follow for more content. I appreciate you. Have a good one, traders.